that question forward with Mukul Kochhar from Investec Capital Services, who is joining in. Mukul, good morning. Thank you for joining in today. And the big talking point, of course, has been the HDB Financial IPO. And what would be your view on this, right? It's a large IPO. What do you make of the price band that it has been put out? And will this finally buck the trend and eventually tell us that, okay, a large IPO can also generate returns for investors?
Yeah, so interesting statistics there, by the way. So on HDB Financial, we really don't have a strong view. We are not one of the banks on the issue, so I would not give a very pointed comment there. But broadly, on the IPO cycle, what happens is it's like a cycle, like anything in the market. And the larger IPOs happen towards the fag end of the IPO cycle, when there's a lot of excitement and big money comes in and bigger IPOs get absorbed. And that is when, there's overexcitement, and that is when the pricing dynamics actually fail. That's probably one of the reasons why you're seeing the returns being tepid in large IPOs. HDB Financial, just one comment, comes from a very respected house. So there will be some pricing premium based on that, but performance has been a little tepid in the recent past. So both these dynamics will be taken into account as the bankers price the issue.
Absolutely. There are factors that I have to take into account as well. I don't seem bada hai to better hai. Whoa. That dialogue of Hormaz, hoping that it doesn't turn out to be true even now. But Mukul, good morning. This is Vinnii joining in the conversation as well. I just want to understand overall financials. We had those RBI norms that came in for project financiers side as well. What is your story, or what are you expecting coming in from the financial front? Whether you would look at PFC RECs, PSU banks, private banks, NBFCs, what interests you in the financial pack?
So the financial pack per se, definitely, barriers to entry and competitive advantages are at play, as scale is a clear sort of, differentiator here. And scale is a differentiator across multiple points. Its cost of deposits is better, for the larger banks. Then, your OPEX is better as a percentage of AUM. So they're just able to price risk better. On top of that, they also have access to the better customer pool. So what's happening is the market's understanding that, and clearly the larger banks are trading at a higher band or higher price to book than the smaller banks. Now that itself then in a circular loop gives them a competitive advantage, because since they can dilute at a higher price if they want to grow higher or at a faster rate. Their cost of raising funds is lower, or equity funds is lower. So having said that, advantage larger banks, mid-market banks, they're selective ideas where we are active, but largely, we are focused around the larger banks, because that's where the barriers to entry and the competitive advantage is clearly showing. With the mid-market banks actually trading at book or below, the story seems a little challenged. Yeah. On the government banks, a very controversial. Next 2 years, of course, earnings are going to be under stress, because they've taken write-backs benefit. There's also an adverse rate cycle which they're facing. So consensus is that they will see substantial NIM pressure, and earnings growth will be tepid. I feel the contrarian view that that things may turn out better, and the worst is priced in for the next 2 years, and the market may look beyond that to FY28. And on that basis, these are still double-digit ROE banks trading at or below book. So valuation support is there. So I'm actually personally in the camp that PSU banks deserve a look.
Mukul, I was just reading a report a few days ago which spoke about a $40 billion consumption boom that is lined up in India because of the various steps that have been taken, the budget cuts, the rate cuts from the RBI. But on the flip side, there are also reports that unemployment is on the rise. But if you take a look, do you see a potential for a consumption boom in the country, especially because the macros don't seem to suggest otherwise, because unemployment being on the rise? Do you see that being confined only to the premium space, the premium consumption, or because of the fact that there has been a rate cut from the RBI and this tax boost as well that has come from the budget, you would see the lower entry level, mid-income sort of consumption also get a boom because of this?
So again, a very hotly debated topic amongst investors. My view that we are moving towards more a savings investments economy. Market, by the way, market prices are reflecting that. You've seen returns getting better there. And if you're going to do a savings investment-led economy, it's going to come at the cost of consumption. So I tell people a overall low consumption is a feature, not a bug of this economy that we're headed into. And that is what, and the second point is, we historically have been a consumption economy, less investment based economy. So in that case, all the consumption stocks are fully scaled. Yeah, some of the largest market cap companies in India are consumption companies. So these are fully scaled companies. On that scale, growth in a weaker consumption environment is lower. Multiples are exceptionally high. So these stocks will struggle to work in the medium term, next 3 to 5 years. Within the pack, of course, as you said, premiumization is a definite theme. So even if overall consumption grows lower than GDP, growth, because savings investment grows higher. Premiumization, I think, remains a solid trend. You can see that in autos, you can see that in the hotel industry, you can see that across the board. The premiumization actually still remains a solid trend amongst a weaker consumer overall.
Okay. Premiumization is a trend that is remaining solid for a while, is what you're expecting to see going forward as well. Mukul, what's your thought coming in for something like the food delivery apps, whether you talk about Swiggy or Eternal? These are two options that we have right now. What are your thoughts on this one? If consumption improves, do you think we're going to keep clicking a bit more in terms of ordering our food online as well?
So clearly, just fair disclosure, we don't cover these stocks yet. So, but broadly, I can tell you that, e-commerce in general is reducing friction, there is a definite play there. It opens up new avenues for the consumer in sort of, consuming at home. Definitely a solid play. Again, we believe that the trend of eating out or eating at home or ordering from outside is going to increase as overall well-being improves in India. By the way, just on the, and this is all related, just on a consumer who can consume more at a premium end. If you look at the demographic of the premium consumer in India, that demographic itself is growing at 12 to 13% CAGR. So the demographic, as in the number of people who are able to consume premium product, is growing at 12 to 13%, whereas overall population growth is much lower, maybe in the 1% handle. In that case, you add some inflation to that. Most of these companies which are sort of, exposed to more sort of different and more sort of premium consumption inherently start with a double-digit revenue growth expectation. So per se, anything about, consumption from outside, all these are similar trends, which is basically a consumer that is moving up.
Just as you spoke of premium consumption, Mukul, Vinnii already placed her order for lunch on her phone. But thank you so much for sparing time and joining us today. Look forward to having you more.
All right, thanks.
Thank you so much for joining in, and take a short break here on Trading Hour. Back with more on the markets on the other side. Stay tuned.